And joining us in the studio today is the head of commercial banking with Stanbic Bank. His name is Renato D'Souza. Mr. D'Souza, good morning.
Good morning, Du.
How are you?
Good morning.
Yeah. How are you doing?
I'm doing very fine, thank you.
Karibu Sana. You're in the hot seat of the Situation Room. Recently, we were talking regional issues, and of course, the banking arena comes into play here, and making the transition and making businesses more resilient, definitely, and that forms part of the conversation that we will be having this morning. So as we normally do, we're going to welcome you to the Situation Room with today's proverb, and we're going to put you to work. So in terms of your ability to then interpret, we'll tell you where our proverb is from this week, and we'd also love for you to do an interpretation of the same for us.
Sure.
We are in Mozambique this week, and our proverb goes like this. It is only the, I beg your pardon. So it is only the elephant. Sorry, there is no elephant that complains about the weight of its tusks.
Okay, thank you. Wow. So my interpretation of that proverb is sometimes life does throw us challenges, and you're not too, should I say, incapable of carrying those challenges with you. So God never throws you challenges that you cannot overcome.
Yeah.
I think in my view, that's the meaning of that.
It's true.
Yeah.
You go with it somehow. You and Jesse on the same page there.
What is it they say about great minds?
They think I like
That's it's already been established, and that's where we are.
Yeah.
Okay. So we're looking into giving us an overview of what usually when we're banking and we think, okay, so I'm in the banking hall, I'm depositing or I'm removing cash, I'm taking a loan, I'm funding my business, or I'm just paying fees, I'm getting things done. And for a lot of people, the banking agenda begins and ends there. But we've seen over time that things have really, transitioned, and they've really moved to a place where, a bank, Stanbic, is not just where you just go and deposit and withdraw. That there's a lot that's happening to ensure the spaces in which we transact financially are developing just as we are. So walk us through a little bit of that journey in terms of what's happening before we then get into what it's doing for resilience and growth around the region.
Yeah, thank you, Ndu. Maybe before I answer that question, allow me just to give you a brief of how we're structured, and it will probably answer that question. So Stanbic Bank is a listed bank. We're listed in the Nairobi Stock Exchange. Our parent company is based in Johannesburg, South Africa. And the way we are structured in Kenya is that we have three business units. So we have the corporate and investment banking, and this is where we take care of the large local corporates, the global multinationals, the large public sector names. And then we have the business and commercial banking, which is where I sit. And this basically looks after the mid-sized corporates. And then we have the personal and business banking, which is basically the retail banking. So in terms of the landscape, and when you look at the Kenyan economy, a lot of stuff is happening within that commercial banking space. And as a bank, we've made a deliberate strategy to focus on that agenda. In fact, at group level, the East Africa Growth Agenda is firmly part of the group strategy. So when you look at this region, we're talking about an economy of 56 million people. And when you look broader across the region, Kenya, Uganda, combined population of about 170 million people. So very, very huge opportunity. A lot of these people are looking for basic banking services. And I think that's where we as Stanbic come in to support local businesses and support the growth of this economy. And like I mentioned, it's not only in Kenya, but across the region, so to speak.
Okay.
Yeah.
So then what does your role entail as head of commercial banking? Yeah.
Okay, fine. Maybe just to give a brief about myself so that I can try answer that. So I'm a career banker. I've spent about 15 years in banking. Previously, I was in corporate and investment banking. Like I mentioned, that deals with the large local corporates and the multinationals. I, however, transitioned into commercial banking, and commercial banking is basically the mid-sized corporate. Like I mentioned, it's mid-sized corporates that run, that operate in this economy, and within that commercial banking space, we have different sectors. So the way we structured our business is aligned to the different sectors that support the growth of the Kenya economy. So agriculture, we have a diversified sector that looks after manufacturing. We have a public sector team. We have a technology and medium team. So I oversee that team, basically of relationship managers that interface between actors, the interface between the clients and the bank. So my role essentially is leading that team, understanding clients, businesses, providing solutions that essentially meet those clients' needs. Yeah.
Okay. Now, when we look into how this then gets out into the region and how people then can come in, what does the commercial proposition entail in terms of what then you're able to do for people?
Okay, that's a very good question. I think when you look at the commercial banking proposition, it's quite diverse. Like I mentioned, we are sector focused. We do have various sectors that sort of mirror the Kenyan landscape. So our commercial banking proposition cuts across the various sectors. And just to give you some insights on some of the propositions we have. So for for example, agriculture contributes about 21% of this economy. If you look at the key value chains within agriculture, tea, for example, is one of the key sectors that drives growth of this economy. In fact, I was just looking at the data. Last year, we, from our FX perspective, we earned 215 billion. As Stanbic Bank, we actually known as the tea bank. We have supported that entire value chain from the farmer, where the tea is grown, right up to the tea exchange.
Okay.
The tea exchange in Ombaso. So across those verticals, we have provided solutions, including working capital facilities for the downstream players, the buyers and the brokers. When you look at upstream, we have provided growth capital to the independent tea producers and the farmer. We have something called chai loans. So a lot of these farmers who supply tea to the to the tea factories sometimes would not necessarily have the money to make ends meet. So we've come up with something called chai loans to support them. I mentioned to you manufacturing, and I think this is one interesting area. If you look at the contribution of manufacturing to the economy, it's quite it's quite low. But as you may be aware, the government is trying to push that to 20% by 2030. So as a bank, we are very keen on supporting that sector. We are in the process of finalizing our family-owned business proposition. And basically, this speaks to how we support family-owned businesses which operate within that sector. With growth capital, when you look at some of the family-owned businesses, these are businesses that's sort of transitioning to second, third generation.
Yeah.
So ours it's more than financial, I would say. If you look at the non-financial aspect, the advisory piece of it, allowing them to expand into the region, because a lot of them are looking at expansion opportunities across the region. So I would say in terms of our proposition, it cuts across the different sectors.
So when you talk about growth capital, you're talking about essentially loans or credit. Or what do you mean by growth?
Not necessarily.
What do you mean by growth capital?
Growth capital doesn't
especially when you talk about support. Sorry. Yeah.
So not necessarily growth capital, and I think this is something probably we need to demystify.
I think so.
When people talk about growth capital, there are various sources of capital. Remember, debt is just one component of how you could fund your business. At Stanbic Bank, we look at various options. Remember, we have a very strong advisory team. We're able to help you access the debt capital markets, equity capital markets. So over and above traditional debt, we can also look at other various forms of funding, And maybe just to give you an example, and this is in the public domain. I think if you look, you're aware about the Econ transaction regarding students' accommodation. When that client approached the bank, we thought that there were more innovative ways of them accessing capital rather than the traditional vanilla loans. So we arranged for them a green bond. We were able to tap into the capital markets, specifically through the London Stock Exchange, and we were able to raise for them a green bond, which was deployed towards affordable students' accommodation. So when I talk about growth capital, it's not necessarily debt. It is alternative sources of capital, and it's also important to understand that the way we are structured as a bank, we do have representation across different parts of the world. So we are 20% owned by ICBC. We're able to tap into the capital that sits in Asia. We are in New York. We're in London. So bringing these pools of liquidity to try and support growth of the African continent is something that we pride ourselves into.
I'd like to take your focus to steps the bank is taking to tap into current and emerging growth sectors in Kenya and around the East Africa region. Because in Kenya, case in point, there's so much emphasis on empowering micro and small-sized medium enterprises and to buffer them up for economic resilience. We well know of the critical role MSMEs play in Kenya's economic sector. Talk to us about the steps taken by the bank to tap into, case in point, the MSME sector in terms of financial support, if it's capacity building, if it's digital literacy to some of this youth and vulnerable groups, including women who might be looking forward to get into your business and whatnot.
Yeah, thank you, Jesse. And I'm glad you asked that question. So if you look at the SME landscape, we're talking about 1.5 million registered SMEs in Kenya. The number could be much higher, depending on how you want to look at it. But this cuts across the micro that would not necessarily be banked, and then you have the SMEs. So it's quite broad. Traditionally, banks have looked at the bankable population, which is probably the 1.5 million. If I was to look at the opportunity size. So two things we've done. One is we do have a Stanbic foundation. So for the micros that would not necessarily have access to credit, we have worked with the Stanbic foundations and development partners like the USAID, USADF to try and provide grants. In fact, we did run a grant program, and there are quite a number of MSMEs that were successful in accessing those grants. So working closely with the Stanbic Foundation, we have been able to support the micro SMEs. From an SME perspective, I think one of the, we did run a survey some time back, and what was interesting is a lot of these SMEs didn't, the feedback was interesting. A lot of them said access to credit was an issue, access to markets was an issue, and what we did is we've developed our digital lending capability, which uses data to pre-qualify clients. So we are able to use data to provide unsecured facilities up to 3 million. For a maximum of 24 months without them necessarily having to provide collateral. And if you look at the numbers, this year alone, I think we've provided about 2.4 billion worth of loans to that category of clients, which can be quite transformational. And the other thing we try and say within the business and commercial banking space is about positive impact. So it's not about lending, it's about creating positive impact. So job creation and also access to credit is what we're trying to push. So I think in those two aspects, the Stanbic Foundation and a lot of stuff we're doing around the digital lending has helped us to get more people within the banking space and improve financial inclusion.
How have you seen that these small and medium enterprises have improved in terms of their business operation, their business offering, as a result of the input that you've been able to deliver?
So I'll give you an example. There's 2 weeks ago we spent a bit of time in Kamkunji, and it's a very interesting market. If you've been to Kamkunji, it's probably one of the spaces you'll see, or the microeconomies that you'll agree with me that does have quite a huge population of these traders. And there's one lady we supported. She imports shoes from China, and she's been able to. They've been able to, as women, they've been able to aggregate and bring in containers of shoes, which they then sell through Kamkunji. So they have this distribution model where the wholesale, they would bring them wholesale and then sell them to the retailers. That lady has been able to open, I think, 2 or 3 more shops. In fact, she's opened a smaller shop for her daughter. She's been able to build, she's now into real estate. She's built a small apartments, which she's renting out. And to me, that was really, positive impact that I believe we as a bank have made at a micro level. Because this lady ideally would not be able to tap into, funding. But the small support that we've been able to give her has enabled her broaden her business, has enabled her grow her business to the point that she's now, into real estate. So to me, that was profound, and I think that is the kind of support that we as a bank are providing to a lot of the, the SMEs and commercial banking customers within Kenya.
Okay. So technology obviously is a big issue here, that when you looked previously at how we're able to do things, that technology didn't play a big role. But today it is, that you can be seated at the comfort of your home. Correct. And you're doing so many things at the same time, or you can be on the go, and you're going ahead to bank. They're essential for transactions. So the question is, how is it redefining commercial banking? We've seen it redefine so many other areas, education, markets, etc. How is this actually redefining this sector where we see that there's growth that's spurring across the region?
Yeah, so that's an interesting question. I mean, if you look at the traditional banking and, where we've come from and where we are today, I think there's been leaps and strides that the banking industry has made. Just to give you an example, previously, you would need to go to a bank with heaps of documentation to apply for credit. And as you can imagine, the process of loan applications was quite erroneous, time-consuming, and it also limited the access to credit, so to speak. Today, if you're a Stanbic customer, at the comfort of your phone, you are able to go to your profile. You will be able to access pre-approved limits and actually, buy a vehicle. It's almost like Fuliza, but on a larger scale. So using pre-scored lending and data, we're able to understand customer behavior. We're able to risk rate and credit score our clients and provide basic banking services that ideally would not be available on traditional platforms. So at the click of a button, you're able to access a loan and to buy a vehicle instantly and, make payment to your supplier. I think that's the kind of transformation in terms of technology. But I also think it's the efficiencies that technology has created in certain value chains. And sorry to take you back to the tea sector. If you look at the tea sector traditionally, there was a lot of, it was a very disintegrated industry, in the sense that the buyers and brokers and the tea producers were not brought into one platform. And what we did as a bank is that we developed a electronic billboard. It's sort of a digital platform where all these participants can interact. And so in so doing, we created a lot of efficiency to the extent that farmers were able to get real-time payments for any sale of tea that is being done at the auction. So if you go to the Yatta exchange in Mombasa, the billboard that trades tea is actually a Stanbic system.
Okay.
And that system, once the catalogs are uploaded and, the buyers buy the tea, payment is made through the digital platform, and it just basically settles the brokers, the buyers, and, ultimately the farmer gets their share. But that's the power of technology, and that's the innovation that we bring as a bank. There's also an interesting piece of work that we're doing within the dairy space. If you look at the dairy industry, a lot of the small scale farmers supply milk to the processors.
Yes.
We have come up with technology that allows us to get data on how much milk is being delivered to these processors, and based on that data, we can be able to give them advances against what they've delivered. But not only advances, we are able to connect them to input suppliers. So if you need animal feed, we're able to connect you to the supplier, and you don't necessarily have to pay for it. So that technology brings together all these participants and sort of creates efficiency, and also improves the output for the farmer. So yeah. I think that's some of the examples of what we as a bank have done from a technology perspective. Yeah. Having looked at some of these issues that we've spoken about before, Renato, and saying, okay, so we're getting to a place whereby there is a lot of growth. There are more people today who are doing business than they were obviously 10 years ago, and looking at solutions that will then be able to assist them to sustain their business. Is there enough, along these lines, what you've talked about, growth capital, growth support, for the numbers of people that we're seeing entering into the market? They say any good idea, capital will follow any good idea. I think, like I mentioned, the way we are positioned as a bank is we are able to access different sources of capital. We do have our 20% shareholder, ICBC, which is the largest bank in the world. And they are able to provide us with that access to capital that necessarily doesn't sit in Africa. When you look at financial markets like New York or London, these are pools of capital that we as a bank are able to access, leveraging on our distribution network. But like I mentioned, capital does not necessarily come in the form of debt. There are alternative sources of capital. So when you look at the debt capital markets or the equity capital markets, we have supported businesses to access the capital markets through the Nairobi Stock Exchange. I think if you go through the various literature that is out there, we've actually supported quite a number of companies to access this capital. Remember, we are also part of the Standard Bank Group, so we can tap into capital as and when. We have, from an SME perspective and commercial banking perspective, we do have a very strong balance sheet that is able to deploy capital into the various sectors, and we've done this quite successfully, not only for the individuals, but from a commercial banking point of view, we do have various innovative solutions that we've come up with to provide capital. If you look, for example, at the agri sector, some of the customers we've talked to don't necessarily have the collateral. So we've tapped into structured trade and commodity financing facilities to provide capital to support macadamia farmers, avocado farmers, tea farmers, coffee farmers. So rest assured, we do have adequate capital, and that does not necessarily mean that we are providing debt, but also tapping into other pools of liquidity.
Okay. Just to take you back to the embracing the digital advent and all that, are you in the process of incorporating AI into your day-to-day activities, perhaps in terms of customer relations at any point, at any structure? Because you have to strike a balance between those who value human-to-human interaction and those who are looking for the digital tech-savvy bank that can, serve their needs at the click of a button and whatnot. So talk to us about that. But equally, I'd like your take on the steps the bank is taking to facilitate regional trade and integration. Because in the digital world we live in, the world is a global village. We've heard of borderless banking. How real time is it in case I'm a customer at Stanbic Bank? Trade financing as well, the facilitation of trade within the East African community and region by supporting businesses and expanding their operations across the borders. Talk to us about that.
Okay. Thank you, Jesse. I think I'll answer the second question first. There's a very interesting piece of data I came across. Have you ever asked yourself where Kenya sits in terms of ranking of population?
In Africa or in the region?
Globally.
Tell us.
Yeah, so I was driving from Nyanyuki with one of my colleagues last week, and Kenya is 26th globally in terms of population ranking. We have about 56 million people. When you look at Tanzania, about 70 million people, Uganda maybe 50. So we're talking of a population of about 170. When you look at this region compared to the rest of Africa, and I think it's one model that a lot of economic blocks have tried to replicate. We're talking about a market of 170 people that are integrated. I think this is the most integrated
170
region.
Million people.
170, and this is Kenya, Uganda, Tanzania. I'm excluding DRC and Ethiopia.
Yes.
Because that takes us to probably 500 million people and puts us, if you look at India, 1.4 billion, China, so probably put us in top 10. But, when you look at that data and the way we sit as East Africa, it's a very integrated region. And the need for connectivity in terms of banking is very critical. So if you look at the interregional trade between Kenya, Uganda, and Tanzania, we actually have a very huge trading block, and there's a lot of trade that happens between Kenya, Uganda, Tanzania. If you look at fresh food, vegetable, manufacturing goods from Kenya into Uganda. And one of the things people find very difficult is the ease of payments. How do you make payment from one jurisdiction to another seamlessly, efficiently, to facilitate cross-border trade? And it's something that we as a bank have, we've really looked into that. We've come up with a borderless banking proposition where a trader in Uganda is able to make payment to a supplier in Kenya instantly without necessarily to transfer money. So, when you want to buy goods from Kenya, you just need to make payment into your supplier in Kenya at the comfort of your office, and that sort of facilitates cross-border trade. So I would say there's a lot of work that has been done. There's still more. There's the East African payment system that is being developed, and as a bank, we are firmly positioned to take advantage of that. They say by 2030, 1.5 trillion worth of payments will be transacted within these borders. So, developing that digital capability is critical for us, and through our borderless banking proposition, we are able to provide customers with that ease of transacting and moving payments across borders. To your first question around AI, definitely. There's a lot of AI being used now. We as a bank are also trying to take advantage of that. Like I mentioned, we do have a data team that analyzes customer data, and we are even able to tell the next best product. So Jesse, trust me, if you're a Stanbic customer, I probably will be able to tell you using, the models that we have that Jesse just bought a Mercedes. He probably is a candidate for insurance product.
Yeah.
So using AI, data analytics, there's a lot of information that we're getting remotely, and we're interpreting this data to make informed decisions. Something interesting also is, traditionally a sales job was, I would say, very mechanical. So you'd have to come up with a sales plan, identify opportunities, and try and go out to seek those opportunities. Today at the bank, we're using data and information to try and point relationship managers to where opportunities would be. So when you get a call from your relationship manager thanking you and probably probing you about a certain product, there's something they know that you probably are not able to tell. So using that kind of technology, the bank is supporting individuals and corporates to trend and access credit and make more informed decisions.
Yeah, the management of money landscape is also changing in terms of what people are then able to do and where they put their money for the future.
Yeah.
Whether it is, sending your child to school in a different area, whether it's managing wealth later on. What are some of the innovations that are going towards that under the umbrella to ensure that people have, that nest egg that they may be looking for, that basket of goodies to keep for later?
Yeah, okay. Thank you. So, and I think Jesse had asked that question and I probably didn't answer it. It's around how we are supporting individuals make correct
financial decisions, whether it's in the present or in the future.
Yeah. So we run something called a Financial Fitness Academy. I like saying that Stanbic, we're more than lending. We have a Financial Fitness Academy that we run as a bank. So if you're a Stanbic customer, we are able to take your staff or take you through basic financial literacy. And, based on experience, what you think is obvious is not obvious to a lot of people. How you create wealth, how you transfer wealth, how you preserve wealth is something that is not obvious to people. So we run these Financial Fitness Academies. We don't charge for that proposition. We're able to educate our clients on how to make better informed financial decisions for the future. But also from a financial perspective, we do have different capabilities within the bank. So we have a wealth and investment banking team that supports clients in making wealth decisions. So if you're an individual and you're looking to create wealth, and if you look at that wealth journey, there's wealth creation, there's wealth preservation, there's wealth transfer. So there's a lot of products that we have within those verticals to support clients, including our offshore capability. A lot of the, just to take you back into commercial banking and family-owned businesses, what we're seeing now is that a lot of the family-owned businesses are transitioning into second, third generation. As you get to the third generation, you find a lot of these heirs to the businesses don't really want to get involved in these businesses. And I think I personally, my dad ran a small business, and after he educated us, it's only my older brother who wanted to go back and support the business. But for the rest of us, we're not interested. So working together with our offshore team, we are able to support clients in that transition, through creating trusts and separating management from ownership, such that if the owners of the business want to take a backseat, the business can still run, and whether it's a dividend or whatever, they can still run it. And that also speaks to the individual level. So you've created, you've worked hard, you've earned money. What are the different sources of the different solutions with respect to investing? And we also have come up with a new business unit, our insurance and asset management, where we've come up with our a team that supports customers in terms of wealth and asset management. So we do have a money market fund, both in local currency and foreign currency, that you could invest in. So if you look at both the individual and the corporate, we do have various solutions that we support clients in terms of preserving wealth and securing it for the future generations. Yeah.
And so how does that start off? somebody comes in and says, here I am, and this is what I would like to do. This is what I have. How does that conversation then begin? And then what does it then essentially transition to?
Yeah. So it begins with understanding at what stage the individual or the corporate is. Mm-hmm. Remember, if you're just starting off as a business, you probably will not have money to invest in for savings or for future. Mm-hmm. So that conversation starts by understanding the life cycle of that individual or corporate. Once we understand that life cycle, we're able to come up with solutions that are tailor-made to individuals. At Stanbic, we say we don't sell product, we sell solutions, because what works for Jesse will not work for Ndu. So we really need to be very, very intimate with the client to understand what is it that they are looking for and at what stage they are in the investment cycle to be able to come up with a solution.
Yeah.
A more mature client or individual would probably be investing in euro bonds, in long-term securities, in money market funds. So it's understanding the life cycle and then tailoring that solution to meet the needs of that client or individual.
Yeah.
Yeah.
And where do you start? Some people are saying, well, I need to have been at a certain place before I can now even come down and have a conversation with somebody. Are there requirements as to where in this journey I must be as an individual or as a business to come and have this conversation?
No, absolutely not. Absolutely not. It just, we pride in ourselves in the sense that we do have relationship managers that are well trained and they understand the market, they understand the individual. So it's a question of engaging your relationship manager, walking into a Stanbic Bank branch, engaging the relationship manager, and basically telling your story. Once we understand your needs, we will be able to come up with the solution that meets your requirement.
Yeah.
So it's that initial conversation that you need to engage with us, and more often than not, we probably have a solution that meets your needs. Yeah.
Okay, and it's good to know that you're quite keen on understanding wealth management and enhancing financial literacy. I'd like your take on your gender inclusive economic participation programs that you have at Stanbic, but equally knowing very well that agriculture is a key cog in Kenya's economy. What are some of the agribusiness commercial banking solutions that are available for potential customers and present customers? Yeah.
Okay. From a financial inclusion perspective?
Yes.
Yeah. So within the SME space, we have 6 personas that we support. The trader, the farmer, healthcare. One of the personas we support is the Dada. And Dada speaks to women. It stands for Dare to Aspire, Dare to Achieve. So it's a Dada proposition that we've come up with, and it specifically speaks to the women. It speaks to women-led businesses. We are very keen on supporting women-led businesses, both, again, financial and non-financial. We've also brought in development partners, credit agencies to de-risk and help us support the women-led business. One thing that is interesting, Jesse, the credit default rate for women is much less than men.
I hear that.
It's much less than men. And I was having a chat with one of the chairman of she's a chairman of one of these women-led circles. And one interesting data point that she gave me is that a lot of the women come and borrow on behalf of their sons, their husbands.
Oh, is it?
Yeah. It happens. So there's a lot of trust and there's a lot of willingness to pay, which is one key attribute we look when we want to lend in financing women. So through the Dada proposition, we have come up with a proposition that supports the women in business. Like I mentioned, we have also partnered with the ATIs, the AGFs of this world to try and support that women-led agenda. and with very positive results. It's interesting to see how much women-led businesses are contributing to the Kenyan economy.
Yeah,
I think for us, we are trying to elevate that. Recently, we did host a session for women in Safaricom. About 40 women we brought together. We've supported them with funding, working through with a TD, and not necessarily asking them for security, but the performance rate of that book is quite commendable, and I guess it speaks to financial inclusion. Remember, financial inclusion is not only from the customer side, but it's also internally. We do have a metrics of the ratio between the gender balance internally as a bank. We are supposed to be at 50-50 men to women, which is something that we are really working on. We are not there yet, but there's a lot of strides that has been made in that regard. Yeah.
What's difficult about this landscape?
So it's basic challenges that women face. I think traditionally African society has shunned women, and I read your profile around your gender focus, and
oh my goodness,
probably we need to invite you to speak to our dada women at some point. But I think society has basically put women at the periphery of economic development, and you sort of get the feeling that society has sort of downplayed the role women hold in economic development. So women have reached this point where probably they feel they cannot be making meaningful impact. And I'm a father of 3 daughters. What I've seen is we need to empower women. We need to give them the tools and support.
If I can, So I'm trying. If I connect the dots between what you're saying, just in answer to Jesse's question, where you said, what we've then been able to see is so much so that you've created a program, and then been able to see that this cadre of society has been able to start innovate and put the money behind businesses that are flourishing, right? So if you can see that would work, then it makes the case for saying, come on guys, here, and looking at the country at large or the region and saying, here's a model that works. So whereas you had put these people on the periphery before, this is a case for why they must be included.
Correct.
Why financial inclusion for these focus groups must be a thing that you do.
Absolutely.
Am I going in the right direction?
You're absolutely right. And precisely what our data proposition advocates for. It's financial inclusion for women. It's for women. And remember, access to credit is one thing, but having that financial literacy is another thing. So when you look at the tenders, go to any public website. Look at what is out there in terms of tenders. And I must say there's a lot of strides that have been made in terms of getting that quota up for women and special interest groups. But a lot of these tenders and opportunities are sort of earmarked for general public and not women and people with disability. So what we are finding increasingly is that a lot of corporates are looking at this differently, and they've put a quota. They've put a quota specifically for women. There's one corporate I know that has a 30% quota for women and people with disability and youth. So what are banks doing in terms of creating solutions that help them tap into that 30%? Because fine, you have the 30%. Then you walk into a bank, the bank will tell you, go provide us with 3-year audited accounts. So we've tried to, so our data proposition has sort of tried to make that more flexible for women. We are curating a proposition that supports women in terms of capturing that opportunity without necessarily, looking for or being thrown away and not being able to capture that opportunity. So a lot of work still needs to be done, I think, as a banking sector. Stanbic has made significant strides in terms of supporting women. through the data proposition.
Right.
Yeah.
Are you saying that you're able to replicate this across the region? I mean, yes, Kenya specific, I guess, for a lot of things, but are you able to replicate these ideas around a region where it's hoping to come together? And I say hoping, come together in terms of how it operates?
Yeah, most definitely. Remember, we are in 23 countries across Africa, largest bank by asset across the continent. So whatever works in one jurisdiction, we're able to quickly replicate. There's a lot of learnings we've got from different countries, and we've been able to replicate across the continent. I think that's the power we as Stanbic and Standard Bank overall bring, because we are, we see what's happening in certain markets, and we're able to replicate that into other markets.
All right. So what do you hope that would look like into the future steps being taken, and what would business then look like with the support of a financial institution? But where could we go?
Yeah, like I mentioned, we are sitting on, I would say, the verge of greatness as a bank, as a country. Look at what's happening in East Africa, the infrastructure that is going into developing this country. 2 weeks ago, we had one of our colleagues who came from Group, and it's interesting that he mentioned that he sees growth everywhere. I think we as Kenyans sometimes beat ourselves too much. There's a lot of growth that is happening in front of our eyes, but we are missing the opportunity. This is a region with 170 million people. They will need to eat, they will need to transact, they will need to communicate. So virtually every sector, they will need to live. So virtually every sector, and every sector is going to experience growth. If you look at the way we've structured our business, so we have the agribusiness team. This population will have to eat. So our agriculture proposition is well positioned to tap into that opportunity. If you look at the technology space, they say Kenya is the Silicon Savannah. We do have a technology and media team that, and I encourage you, just engage. I hope you have an account. We have a Tech Connect account that has no charge.
I like that he's pointed at you.
So for the digital content creators, there's a lot of FDI coming to this country. There's a huge opportunity in terms of supporting the technology and media space.
Yeah.
When you look at the real estate, and there's a deficit of 2 million housing per year. We are part of the Kenya Mortgage Refinance company that is providing affordable loans to individuals to access affordable housing.
Yeah.
We're dealing not only the demand side, but also the supply side. Remember, the demand side, we're able to provide the mortgages at concessional rates. But on the demand side, there's a shortage. So we are partnering with government, we are partnering with private developers to ensure that that supply of housing is there. If you look at the infrastructure space, we do have a energy and infrastructure team within commercial banking. So a lot of what is happening in terms of infrastructure, in terms of wholesale and retail, with respect to petroleum product, a lot of this, to move the economy, you need petroleum product to move. We are providing structured trade facilities to a lot of the independent power producers to import black fuel to power these power plants.
Yeah.
So to answer your question, the opportunity is there. It's for us to miss it.
Indeed.
It's for us to miss it.
Renato D'Souza is the head of commercial banking. Stanbic Bank Kenya has been our guest this hour. Thank you for those insights. Good to see a bank on the move, as the region is as well. Asante.
This is the Situation Room, the only way to start your day.